Okay. You guys breakdown for NAS. We can go over gold, US 30, and then GJ. So I didn't trade today just simply because, again, it was a bank holiday and there was going to be no volume, but there was a little bit of a nice move for those of you guys that did trade. I feel like it was pretty obvious for those of you guys that saw the breakdown. So when it comes to US 30, when you look at the daily time frame, price is trading under the 21 SMA. We have consistent lower lows and lower highs. So I'm going to continue to expect US 30 in the indexes to continue to actually drop, at least US 30 to go back down to this 28,650 level. Now, when it comes to tomorrow, and I'm going to be looking for tomorrow, realistically, I would like to see a pullback back into this 29,500-ish range where we did see price fold as resistance all throughout this area here. This would be a great place to take a trade from because, again, if price can maintain itself under this 2,900 area, we should see it go down. And that's the entire ideology behind probabilities. You know, what's the probability for price to pull back into this area? And we could see it continue to go down from here. Last time when price pulled back up into this range, we had a nice rejection and then it moved all the way down into 28,650. So tomorrow we can see a pullback back into 29,500, let's kind of call it, where we can then look to sell it back down into 29,000 flat or this 28,650 range. Now, if price actually breaks above this 29,500 area, then at that point in time, I'm going to kind of wait and see what price does at this 29,770 area where we had this big rejection over here, which, I mean, there's kind of different perspectives. You can look at it. The way I'm looking at it is we have this major support area over here, and then we have this major rejection that we had right here. So if price breaks above 29,500, I'll look for it to come back into this 29,770 area and then wait and see what happens there. Obviously, if we get a rejection there, then we can look to sell it back down to 29,500, which as of right now, price is just consolidating around these major price points. So I'm going to be a little bit less aggressive on the position sizing and maybe a little bit more conservative on the entry signals themselves. Now, at this point in time, we have our support being roughly around here. So 2970, you can even say 2900 flat, right? So I'm actually going to mark this off here as well, this even handle number, because that is a brown psychological level. So really my game plan for tomorrow going into the trading session would be either to wait for a pullback back up into this range being 29, call it 29,400 to 29,500, which would be my first sell zone. Then my second sell area would be a break and retest of this hour level of support, where I'll then short it back down into 28,650. That's kind of what I'll be waiting for on US 30 tomorrow. Now, with the NASDAQ, things are a little bit different because if we go on the daily time frame, prices are right now is starting to trade under this area of support, although it's already rejected 10,845, which is another area of support. So really at this point in time, I would actually like to see the NASDAQ give me a pullback back up into these highs, back up into this area of support where we can look for resistance to be established. And then we can look for price to go down into 10,840 at that point in time. Now, if the NASDAQ doesn't give us a pullback, then what I'll look for at this point in time is a break under support, a retest, and then we can look for price to actually sell down into this 10,600 area. Now, I'm going to continue to look for sells as long as price can maintain under this 11,000 range. Once price breaks this 11,000 range, we could easily see it come back up into this 11,400. Call it 11,500 to be a little bit more precise. So you already know that if we see the NASDAQ break above this 11,400 range, we can expect it to come back up into the highs up here at 11,500 roughly. So again, the safest play I feel like would be to wait for a break and retest of this area, just simply because you don't want to sell it right at this major area of support. I mean, look what happened last time price came down into the support level. We had a huge bullish run back up into 11,700 almost. So, you know, I'm going to want to wait for the confirmed break and then the retest and then look to sell it at that point on, because I don't want to get faked out and caught in basically a bear trap where essentially price looks like it's going to continue to go down. We see volume going down, people start doing shorts, but then price just goes along for the bigger players to come into the market. Because again, you have to remember, for every buyer, there has to be a seller. So that's typically how these fake outs happen. Now, that's what I'm going to be waiting for on the NASDAQ. Again, most likely I'm going to be looking for a break of this 10,840 area. And then from there, I'll look for that retest, then look to sell. It'll be a pretty good trade. This is kind of like the cleanest trade that I see right now on NAS compared to like US 30. Like I wouldn't be very, very comfortable taking a break and retest setup here, which is why I would lower the position size versus taking a break and retest off of this area here. I'd probably trade this a little bit more aggressively with a bigger position size. Now, when it comes to gold, so gold is actually currently trading under this 1677 area, which yesterday what I was kind of looking at here was a possible break and retest of this area, just simply because on the weekly time frame, things are still looking pretty bearish. There's no real sign for me to want to start looking to buy. Support didn't hold, and actually, on the contrary, support is now holding as resistance on this weekly time frame, which is why we need to always consult with the weekly, the daily, and then work our way down from there. We should always look for our main directional biases on the higher time frames, because you could have easily caught these sells last night if you guys were to have been trading last night. Now, again, this major area of support has just been broken and currently is holding as resistance, which is not really too big of a shock. There's a lot of bullish weakness with the last weekly candlestick. So we can kind of expect gold to continue to go down. Now, at this point in time, our nearest area of resistance would be this 1677 area, where we did see price consolidate for a couple of days, I want to say last week, maybe a few weeks ago. We saw price consolidate around this range before ultimately dropping back down into 1645. So at this point in time, the best thing for you to wait for on gold, since we already have this break of structure here, we have a bearish move to the downside, and price is trading under the 21 SMA on this 4-hour time frame, along with the weekly time frame being bearish, is to look to sell. That's kind of what I would do in this situation. But for you to even look to want to take on a short position, you have to ask yourself, okay, where is the best area to look to short? And for me, asking myself the best area to possibly to sell gold would be this 1680 level, where price right now is in 1670 range. You know, it's kind of like, okay, well, we have a 90% chance of going long from here and a 90% chance of going short from there. You know, why would you want to take a trade where right now price is a 50% chance of going up and going down? So at this point in time, I would like to wait for gold to actually pull back into this 1680 range. And then if price can actually reject and that area continues to hold as resistance, it'll cause for a great trading opportunity for price to go back down into the 1660 range, which is roughly from this point to this point about 180 pips. And then again, if price actually starts to break above and trade above this 1680 range, at that point in time, I really wouldn't be looking to take a short position. I would kind of wait and see what price does over the next few hours and see if price continues to trade above. And if it does, you possibly could look for longs. But if it continues to trade under and it holds its resistance, it's kind of a clear as day sell into the next area of support, which would be 1660. Now, when it comes to GJ, so GJ consolidated along this 161 daily level of support. You guys got to keep that in mind. I do see GJ continuing to go bullish, although on the weekly time frame it has a big rejection to the upside, simply because we had a break above this major area of support being 161. You had a price pull all the way back down, and notice momentum significantly starts slowing down. Notice how these bearish candlesticks are slowly getting smaller and smaller. That shows us that sellers are possibly losing steam, and it could just pretty much tell us that we can see buyers coming to the market at this point in time. Especially if this daily candle goes bullish and closes engulfing, then we can expect price to continue to go higher. Now, I am going to be expecting price to go bullish, possibly back up into the 163 range. Obviously, as long as price can maintain under this or maintain above this 161 area of support. If price can maintain above this 161 area of support, you can look to buy it back up into possibly 163, which will be the next major area of resistance, kind of around this range here. Once price breaks below it, then at that point in time is when you wouldn't want to look to sell price, probably back down into like the 160 area flat, which would be an 100 pip downside, and you're looking at a possible 150, 200 pips to the upside here, which again, I mean, both would be pretty good trading opportunities, but as of right now, price is showing us that, you know, buyers can come into the market at this price range, and then we could see price come up until 163. However you want to set yourselves up with a trade that looks maybe something along those lines, ultimately is up to you. You can wait for the break of this intraday level of resistance, because ultimately this is an hour resistance that has been holding for the last maybe 2 days, last 2 days so far. Then you have support down here. So you could wait for the break and retest on the hour time frame, or you can wait for price to come back down and look for another retest of support before looking to go long. At this point in time, I really wouldn't look to take any long positions just simply because we're so far away from when we're going to see real volume coming to the market, which is going to be London session when those banks open up. But then I would like to see a retest of this area if price starts to pull back down into the Asian session. Again, buys are still valid as long as price can maintain above this 161 area. Realistically, I would probably start looking to short once we can get under this intraday level of support being probably 160-700. Those are the lowest points we've seen price trade around this support range, because you have to remember, like, 161 isn't a specific price zone. It's an overall range of support that we're looking at here in between this 161 and this 160-700, let's kind of call it. So once price can actually break under 160-700, then ultimately this bearish trend is still in effect. You look for the break and retest, and then look for price to go short back down into 160, which is this support down here. Even 159.500 would be a pretty good area to look to target. I mean, from this point to this point, that's roughly 114 pips. But like I said, right now I see the buyers have a higher probability of pushing price up. So I would wait for that break. I would wait for that retest of the support zone. And if price can give you a break and retest, then you could slowly start targeting these other intraday levels. The next area I'd look to target is 162.500. And then from here, we could look for possibly 162.800 and then 163. So does anybody have any questions? I don't have much time to answer too many questions. So if you have a question, make sure you get it out there.
Oh, yeah. I have a question. What's your bias on GU?
On GU, I don't trade GU, so I don't have a bias. I mean, GU overall is looking very bearish. Obviously, we see price making lower lows and lower highs. It is interesting, though, because we've seen a very big bullish move, but we've also seen price pull back to a major area of support being this area right here. So we can definitely see price go up 4-hour time frame, and we have a big move to the upside. I would possibly expect this GU to continue to go long. So as long as GU can maintain above this 4-hour level of support, you could look for it to possibly go back long into this area up here. But once price breaks under that, then I would probably look to target this area down here, possibly even this area here. So that's kind of what I would be looking for here on GU.
Gotcha.
Yeah. Any other questions? Or is everybody kind of good?
Raul.
Yeah.
Quick question. So when you trade indices, since you switched over to that, you always tell us to look for, like on the weekly and the daily and the 4-hour, for major level of support and resistance. However, it seems like, a lot of these moves you've been doing have been like intraday levels, like, because you're looking at the 5-minute and the 15-minute. So I'm wondering if you'd be able to, because I know you've given us examples, but is there any way that you might be able to give us like a breakdown or some kind of example video on how you do it on such smaller levels? Because like when you've done other webinars and breakdowns, that you show that there's levels upon levels or things like that inside of the major level. So like, how you say like we're going to wait for it to come to this level, but yet in between it's making like intraday levels.
Yeah. So I'll give you the nearest example that I have. So this area isn't as major as maybe this area here. We got to keep in mind at one point in time, buyers were holding this area as a major area of support, right? So when it came to the position that I last took, which I believe was on maybe Friday, I believe it was when I took my last trade. It was on the NASDAQ, where the NASDAQ had broken into that major area of support that we have here on this 5-minute time frame, which I identified based off of a 30-minute time frame and an hour time frame, kind of like incongruence to each other, because that's what you have to do. You have to look at your areas and see how each time frame reacted at those areas. So I think, all of us here can definitely agree that this is right here a major area of support on this 4-hour, hour, and 30-minute time frame, right? This is an area of support where we've seen buyers hold this area for literally days. And once sellers did break under, they held that as resistance, and then resistance here again, And ultimately, this is an area where there was a lot of indecision in the market. So when it came to me taking that position that I did, I believe it was on Friday, right? Ultimately, price had broken under this area of support. I waited for the retest. And again, the concept is all the same. I didn't get in on this initial test here just simply because I was looking at something else at that time. And then by the time I saw like this break and retest, it was a little bit too late. So it's like, okay, let me wait and see if price can break under this support level here, where I could then look to target this support level for somewhat of a little bit of a scalp. If price can hold past that, great. If it doesn't, then I'm not really going to be greedy. I'm still going to get 2 or 3 times my risk potentially, right? But price came all the way back up to here. I saw this first rejection here, and that's when I ended up going short. I ended up going short along this area here. I had multiple positions, went short along this area here with my stop loss above the high and the initial target of 11,100. Ultimately, price started to pump down and then pull back up, and that's when I decided to actually cut my position and get out. So the concept is all the same. I traded off the same major area of support that we identified on the 4-hour time frame, which if we look at it again, we can see support hold throughout this entire range here. If you go to the hour time frame, it's kind of the same exact thing. What do we have? We have support throughout this entire range here. It then held as resistance, then held as resistance here again, and then over here was a little bit of indecision, and then here buyers kind of just broke right here. So it's the same exact concept. I just basically took a trade based off of the 5-minute time frame, just simply because I saw the hour time frame close under it.
Gotcha. Okay.
Yeah.
Thanks.
Bro, I got a question. So if it's like a 1 hour, you just wait for like the 4 hour to close below before you go onto like that 1 hour time frame for an entry, right?
Well, I waited on the hour time frame. Sadly, I didn't actually trade on NFP, or else that would have been like an amazing killer trade. So I was like, you know what? I'm not going to be what would the word be? I'm not going to be too eager to get into the market, just simply because I missed the initial move I wanted to get. But again, you'll always find opportunity throughout the trading day. So when I came into the market, what I saw was this hour level close under, or this hour candlestick close under this area of support. At that point in time, I was like, okay, let's check the 30-minute. 30-minute close under the area of support as well. If I wanted to take a position, where would be the best position to take from, and where can I look for an entry? Where can I look for my stop loss? Where can I look for my take profit? And I ultimately made a decision like, okay, well, if price can maintain and actually hold this area of previous support as resistance, then we can easily see price come back down into this 11,100 range, which would be the next area of support that has the highest probability of getting hit. Now let's go down to the lower time frames and see what market structure is actually looking like. And at that point in time, price had kind of already given me this break and retest, and it's like, oh fuck, whatever, I missed the move. You know what? I'll wait for the retest, or for the break and the retest of this minor area of support, which, you know, I won't be too heavy on my position size. I won't make too much money today, but it's still a pretty good trade. It's a break and retest with the overall trend, right? And then looking for the same area of support to be targeted. Those either wait for that break and retest or wait for another retest of the major area of support, which is basically the breakdown that I gave you guys on the hour time frame, the 4-hour time frame here, just in a way smaller scale. So price ended up pulling all the way back into this resistance level and then gave us this nice rejection here. Price maintaining under the 21 SMA. And at that point in time is when I started to kind of stack into a few sell positions, because I didn't initially go in with like a big, just kind of standard, or a big, maybe 4 or 5 lot. Well, my initial ideology behind the trade was, okay, if I want to overall have 8 lots on this position and I want to risk $15,000 on this position, then instead of me just kind of going in with 8 lots, what I'm going to do is enter 4 lots here, enter maybe another lot off of another rejection, and so on and so forth until I feel like I'm fine scaled in. And that's kind of what I did throughout this entire position. I had a position here, and then like here, right? And then ultimately price just kind of went down into my target. I didn't hold all the way until my target, just simply because it was Friday and I had things to do. And I didn't want to have to monitor the trade all day because I had an event to go to. So I ended up cutting the position pretty much right here when price actually started to pull back on me. So, I mean, it was still a pretty good trade. It's not like a trade that I'm super happy with. I mean, I followed the plan, I executed well, held my emotions pretty well as well. But ultimately, like, what I wanted to do was get in, obviously, way up here during NFP. That's where I would have made the majority of the money I probably would have made for the week. But things don't go as planned all the time. So you just always look for a possible other trading opportunity, not get too eager to just jump back into the market. and be scared that you're just going to miss out on the entire move. I didn't get a whole piece. I didn't get the whole move, but I got a little piece of the pie from like here to roughly right here, which I mean, it was still 30 grand, so I wasn't too upset about it. But that's just how kind of trading is at times. When I don't take my initial position that I want to up here, there's always going to be opportunity later on. You just got to be patient and wait for those opportunities to present themselves.
Yo, Raul, I got a last question.
Yeah.
Do you consider entering longs right now on gold risky? Since the daily closed with a lot of momentum, but price is reaching a level that it hasn't reached since September 15.
I would say longs are pretty risky. Going long right now simply because like you're fighting off this, right? If we've seen over the last 4 days, 5 days that gold has been bearish, and realistically, price is in an overall zone. And if we look at it from this perspective, right, the zone kind of ends right here, right? And price is currently trading under that zone. So unless price starts to trade back above it, I wouldn't look to buy gold at all, because now you're going against the overall flow of the trend, which is a big no-no in my book. But what I would do instead of looking to just kind of go long is like, again, the ideologies all the same. Okay, where's my next area of resistance? 1680. Well, if price can break above 1680, then I could look to possibly go long into 1688, which is a roughly 80 pip move. That's kind of how I would approach buying gold instead of buying gold right here, right now, where it's at. Because I mean, like the example I gave you, gold. I'm going to give random numbers out here. Gold is a 90% chance to drop from this area of resistance, and a 90% chance of buying at this area of resistance, make it 90%, right? And right now, gold has a 50% chance of going in either direction. So why are you going to risk your money on a 50% chance move when you could possibly look to risk your money on a 90% chance move on either side here and here? It doesn't ultimately make too much sense to me.
Okay. Thank you. You explained this. You did this example on the webinar you did on the last weekend on the indices class.
Yeah.
Thank you.
That's kind of what I would do, especially that we're so far away from session. Maybe things would be a little bit different if we were in session, because I mean, you could look at this area here. This is resistance right here.
That's where I'm got a level at right there. We just those two double tops right there at 1673.
Yeah, you could look for that area here as well. If you do take a trade here, I probably honestly wouldn't add too much risk to this position. I'd probably go way lower risk just because the more major area is 1680 right here.
Okay, yeah, I see what you're saying. Yeah, I got the next area right there. Hold on. I think my next area is right there, but I just seen that double top and just kind of added like a, I just added that line just to kind of be safe. But yeah, I have a zone from around 1680 to 1685 around there. Based on that, what you just to the left right there.
Yeah,
but I mean, I'm just being patient though. I've been trying to like be more selective and patient with my setups.
Mm-hmm.
It's because if you like over trade, that's chasing trades. Like some days if I miss the move, I miss the move. That's the hard part, because sometimes you feel like you want to make money every day.
That's not the case, with trading. Sometimes the best position to be in is just simply cash.
Yeah, bro. Because I just got my funding payout last week. Well, Friday. And so
always lit, huh?
Yeah, it was cool. It came quick Saturday too, but now I got to do it over again. So
yeah,
try to get a bigger payout, but I ain't gonna rush it.
Yeah, that's the thing about funded accounts. It's not really at the discretionary of the trader at all times. You get pretty much reset back to zero.
That's cool. They gave my money. That's all I'm worried. That's all I care about. I'm willing to do it again.
Bro, what tips you would recommend if you go?
Account?
Sorry.
Yeah, just a quick question, bro.
Yeah.
Bro, so like on a funded account, say you like up 10K, right? Like,
what
and
size?
you lose in like in between 3 days, you lose the 10K, right? Would that be 10%?
What size?
Of a loss? 100,000.
Well, yeah, you lost 10%, but it's 10% from the initial starting balance.
Okay, bet.
Nah, bro. If you lose that, you said 10K in a day.
Yeah, but he's up 10K.
I'm up 10K, but I lose it in between 3 days.
Oh no, you good then. You good.
So as long as you don't lose 5%
Yeah, that's where I was getting at.
of the starting balance in a day, or you lose 10% of the starting balance in the span of a few days.
Some prop firms use equity-based drawdown.
Yeah,
I don't believe so. No, they don't. At least the ones that I know of.
Yeah, like with FTMO and
my
I'm pretty
Forex
sure
fund
Double
is
Up
equity
too, you're
based.
straight. But yeah, my Forex funds, you gotta watch out with that equity rule.
It'll tell you, like if you go on the account analyzer, it'll tell you the max drawdown you have based on your equity.
Oh yeah. Unrealized loss counts as well.
Yeah.
Even though you didn't close the trade in a realized loss of 5%, if you go above that 5% fluctuation, then you're done. Even by a cent, like you're done.
Bro, I just make sure I'm nowhere near it.
Which you gotta keep in mind the commissions also. That'll also take into account.
Yeah.
What tips you recommend if you go draw down from the initial balance? Like you risk like 0.5%. I mean 0.5% or 0.20, like 0.025%. Like what will you do if you go 3% drawdown from the initial balance on a funded account?
I wouldn't be too concerned until you get to a 5% drawdown, to be honest with you. 3% is 3 trades.
Okay.
You know? But yeah. Andrew was good, bro. I see you in there.
It's good, bro. Yo, I didn't even know there was a webinar today.
Yeah. I know it was a little last minute, but I wanted to get a webinar for you guys before I go to the.
Oh, thanks to you, man. I got my certificate today for my Forex funds.
That's awesome, bro. Congrats.
Sure. Thanks, bro.
It's awesome.
Congrats.
Hey, Ro.
Yeah.
I got the shirt.
Not a question, bro, but I just want to say your recent YouTube video, the live trading one, was really good. I watched it about 5 times.
Thank you, bro. I'm gonna try and do another one, but I've been super busy recently.
Yeah, they're really good.
Scores?
What?
Nah, the live YouTube video.
Oh, okay, yeah. I didn't watch the indices course like 5 times. I just keep watching it. But I was trying to like working on like as far as like the entries off the rejection areas, like the break and retests, man, like just got to get more seasoned with them. Because it's like it'll give you like 1 or 2 rejections, and then it usually give you one more try, and then after that it's gone. So you got to kind of like make up your mind. You been trading US 30 any, or you just been doing NAS?
Me?
Yeah.
I mean, it depends on what looks cleaner. Because I was also looking at kind of roughly the same trade. I believe it was around that range too. Yeah, it was around here on US 30 as well. Let me see if I can spot that from the trade again. So it was roughly like this area here, where I was kind of looking for that same position to kind of play out. Yeah, it was this area right here. But it just looked cleaner on NAS, so I took the trade on NAS just because structure was a little bit cleaner at that point in time.
All right, quick question for you. If the like say where you got the cursor to your left right there and you get in around your support and resistance level, if your stop loss is that high right there, if that stop loss is too high, do you lower the stop loss? Like let's say it's like 100 points.
I mean, it depends on your entry. Like if I take a trade here, I'm going to base my stop off of the highs up here. No, so I'll probably put my stop loss around this area right here.
Okay. My bad for the background noise.
Now you can go.
Yo, Raul.
Yeah.
Yo, can you pick me, bro? Can I be on your team, please?
Bro,
what the hell? I just saw you on Leveled Up story, bro.
Yo, we out here, man. I'm studying though, bro. I gotta take in the knowledge.
Literally, I'm about to pull up right now.
All right, I'll see you, bro. I want to be on your team though. Put me in, coach.
All right, I got you.
Yo, my bad if I missed it, but on NAS and US 30, are you being more careful what sells because it could potentially form a double bottom on the daily?
Yeah, 100%. The thing is, it kind of already has. So we
Yeah.
have rejection here and another rejection here. That's based off the wicks. If we look at the actual candlesticks and how the candlesticks close, the candlesticks are closing lower and lower, which is a great sign for sellers. You know what I
Yeah.
mean? Ultimately, like, you know, these are the top 100 tech companies all put together into one asset. So long term, it's always going to be bullish, right? So, I mean, like, the thing about it is, I am not very, 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 very comfortable holding sells for like a very long period of time and being sell biased on these type of assets for a very long period of time, because ultimately they're going to recover. Right now, the market's going down because there's a lot of talk on interest rates, et cetera, et cetera. And then, you know, there's a lot of fear injected into the market as well, with a lot of talk of recession, et cetera, et cetera. But it's like at some point in time, it's going to recover. And we have to identify when we want to really start looking to buy long term, you know. And at this point in time, if we look at like the S&P 500 index, I'm not looking for buys unless we see a break above 37,800, you know. So although the market can double bottom, yes, that is a big possibility. It's still overall bearish, right? And you also have to think about it from like a bank's perspective as well. If the banks are going to want to take price short, right, and price looks like a long position, then they're going to have enough sellers to be able to come in into the market, or vice versa, enough buyers to come into the market for their sell orders to even be filled to begin with. So the way I see things is, I'm just going to simply be looking to follow the overall trend, which is bearish. And I've been able to capitalize off of that very, very well, not really looking for reversals all too much. I'm just going to simply follow the trend until I see the trend actually break and change. At that point in time is when I'll start looking to add in buy positions. You know, like I'm the type of trader where once that trend is identified, I don't really like taking positions on the opposite side too much, because at any point in time, it could literally flip on you like it did over here. Not to say that you couldn't have capitalized off of this move, but this, to me, wouldn't have been the smartest move to potentially take, because essentially we can already see what happened. But if we look at this, it's like, you know, I personally wouldn't see buys at this point in time here.
Yeah, no,
You know,
I
like,
would have missed
I
that.
don't know what is telling you buys here, other than like you maybe want to try and pick a bottom, right? And then ultimately, I mean, it played out. It did, right? But at the same time, price kind of just flipped at any point in time. That's kind of what like I'm looking for. Like, I'd rather be the type of person where, like, if I'm looking to sell, these are my two major areas looking to sell. Sell, take a loss. Sell, take a loss. That's perfectly fine here. But then I sell again right here, and guess what? I made this loss back, plus way more, you know? And I'm overall trading with the majority of the volume, which is currently bearish. So again, like, unless I see the trend actually change, then I won't be looking to just kind of like look for that reversal trade, you know? What is that, SP 500? And that SP 500 right now is trading under its major low right here. So there's two areas you got to keep in mind for the SP 500. It's this area and it's this area. So you could look for a bounce in between any of these two areas here. So you could look for sells here. You could look for sells kind of like in this range, right? Kind of like, I'll call it around here, you know? Either wait for a break and retest to this area, or wait for a retest to this area.
Okay. And also, back in the day when you were trading your funded account, did you utilize scaling in a lot because you couldn't risk a lot in a way?
Yeah, 100%. So like, I would move a lot of my trades to like break even. So what I would do, for example, is like, let's say like, I don't know, we have I'm just gonna give you a random example, right? Let's say I go short here and price is down here. I'm moving this stop loss to break even. I now had a 2% risk on this position that is free. I see a break and retest. I take another 2% position where this trade is automatically covered. And like, let's say my stop loss is above this wick here. I will then move the stop loss from this entry to this stop loss right here, so I don't take as big of a loss, right? And then by the time price is down here, you know, I would have essentially been in like a 4% risk type of position. But really, realistically, I only scaled into 2%. I only had a 2% risk at any point in time. And that's kind of how I would do things. Sometimes I would go above that depending on how much profit my account is in. Like, let's say I'm up 10, 20% already. I have no problem risking just 3% on the first position, waiting, risking another 3% once the first position's loss could be covered.
But your scale-in entries are always equal or lower than your initial entry, right?
Mm-hmm.
Okay. That.
Yeah.
Thanks.
Basically. Well, it was great talking to you guys. We'll have another webinar tomorrow. I gotta get back to, or I gotta go to the warehouse to get this leveled up challenge.